So you're going to mortgage the house with Mara at 16? Is that right?
If Marathon takes out 16 to the upside, this is Mara, right? That would put it above these levels right here. You see that former support there, right there? So here what we're looking at is we're looking at a weekly chart. We're looking at a weekly chart of Mara. So this is an incomplete, excuse me, that's a Fugaze. This is a daily chart of Mara, excuse me. As you know, I didn't get the top, but I sold it the day it did top, or the following day. No, I sold it the day it did top. Yep, I didn't get the highs, to be fair, but it was a great trade, and I've been waiting to get in. I actually did get in last week, immediately got out a couple of days later, to the point where Straza, we were on the golf course, and Straza's like, I'm like, yeah, I don't know. I got nothing. I'm out completely. And he's like, dude, you're being very tactical with this. And I'm like, I am. And he's like, I'm not really used to hearing you like that, because he's much more tactical than me traditionally. But with this, I don't want to miss it. I want to make sure that I'm in, and I want to make sure that I'm in with size. And because I have so much P&L, because of the trade that got us here, right? Our target was 20, and I wasn't as disciplined as I probably should have been. But in hindsight, good overall, right? All
right.
So
that's good to know.
Back above 16, flip in the book. Let's fucking go.
Flip flop. All right, welcome everyone to CRL Chart Request Live. We were just talking about this before we hopped on the air. Hence the Mara, hence the cold open today. Big fan of the cold open. You know the drill by now. If you have a ticker, you have a question on your mind, drop it in the chat, or even better, email us at the email on the screen there on the bottom, questions@stockmarketmedia.com. Just put like CRL in the subject, and we will do our best to cover all of them on the show. We already got a few emails, so let's go through those right now. This first one's a follow-up on a ticker from the other week, MPC, Marathon, Petroleum, the other Marathon. And the follow-up the question was, what level does it need to hold, and on what time frame is most relevant to you?
Thing's an absolute beast. Can we just start with that?
Yes, it is.
I mean, this thing's an absolute beast. So $60 billion market cap, FYI, which for an energy stock is
this is MPC, right?
This is MPC. Let's label this properly, like gentlemen. And I mean, this thing is just an absolute monster. I mean, there's absolutely no question about it. Let's I always like to understand sort of what's going on underneath the surface. So like I said, oil and gas refining specifically, $60 billion market cap, only pays a 2% yield. This one based out of Ohio, Findlay, Ohio. Are you familiar there, Spencer? Have you been to Findlay, Ohio?
I've been to Ohio. I certainly haven't. I can't say I've been to Findlay. I don't know where that is.
I don't either. But I have been to Ohio as well, and I am a big fan. In Cleveland, they have the Rock and Roll Hall of Fame, which is sick, by the way.
Yeah,
the Rock and Roll Hall of Fame.
Yeah, it's all right.
Are you serious? You're such a hater.
I thought it was a little bit small, but
have you been to any? Have you been to many Hall of Fames? Or have you been to the Baseball Hall of Fame?
Yeah, I've been to. The only one I have not been to is the the football one. But I've been to the
best one's the basketball one. The Basketball Hall of Fame is the best.
Very interactive. Yes. Okay, MPC.
Listen, 135. You know, that's pretty much the level. There's your Fibonacci extension levels, right? And then you got your sell off here. I mean, the relative strength is off the charts. The charts in terms of relative strength. How many energy stocks look like this?
I don't know, all of them.
No, are you kidding me? Come on, Spencer.
Hold on.
You want me to show you what energy stocks look like?
Hold on. The question was, what level does it need to hold, and on what time frame?
135, forever.
Yeah, I mean, I guess when you said which energy stocks does it look like that, I guess I was referring to the short term, the recent history, not so much. I wasn't paying attention to the long term chart on that thing.
This is Transocean.
Yeah, okay, that's more like it.
this is what we're talking about here, Spencer. I mean, come on. This is what energy stocks look like. They don't look like this.
I was looking at the last 12 months.
No, but kudos to whoever put that into the chat, recognizing the relative strength. 135 is the level. Below that, things get funky. There's other ways to get funky in life, not owning things below overhead supply. That's silly. But above that 135, man, this thing's a beast. It's the right space too. I continue to think that we're going to get rotation in the back half of the year into commodities, out of tech. We've already started to see that. As a matter of fact, that was the chart that I was starting with before Spencer rudely interrupted what I thought was most important, which was really the S&P and the NASDAQ running into this overhead supply, right? You kind of had some failed moves back here. Well, that's not going to work. Well, you kind of had some failed moves back here, right? And we're back to the scene of the crime in the NASDAQ and the S&P. This would be a perfectly logical time, in my opinion, for there to be big winners underneath the surface with very low weightings in these indexes, where the indexes have a hard time, but certain stocks and sectors specifically are doing very well. And I think the energy space is one of those. I'm long Chevron. I'm long a ton of Chevron. I own an irresponsible amount of Chevron.
Always irresponsible. Let's stick with...
No, not always irresponsible. Not always irresponsible. Not true.
All right. Okay. Wait. Let's stick with this sector here. I know you own Chevron. We got a question about USAC. This is a natural gas transport company. I guess you can call pipeline company.
So this is an oil and gas equipment and services based out of Austin, Texas. That's a good town. $2 billion market cap. For those playing along, 10% yield. What an absolute beast this yield is. Juicy. $2 billion in market cap, like I said.
Wait,
so this is oil and gas equipment services.
Can we get a chart?
Oh, hell yeah. So this is USAC.
Yeah.
But I like to understand what I'm looking at, Like, I just want to go in blind. Like, I need to have perspective. I don't care about the fundamentals of the company, but I at least want to know, their space, the industry group. The city, it doesn't really matter. I do that for fun.
I'm pretty sure that counts as fundamentals.
Nope.
You don't get to decide what is and isn't. Yeah.
Yes, I do.
The sector and the industry, that's fundamental information.
Absolutely not. You're understanding money flow, and capital allocators are allocating assets into specific sectors and industry groups. That is the behavior of the market. Technical analysis is the study of the behavior of the market, as opposed to the goods and the services in which that particular market deals. In this case, it's important to know that this is an oil and gas equipment and services company that pays a 10% yield. That makes sense. If this was a high growth stock in the NASDAQ, it wouldn't be paying a 10% yield. It doesn't make any sense. So you need to put the piece of the puzzle together. What is this? Is it an oil refiner? In this case, it's some kind of pipeline. Great. That's all I need to know. Is it a semiconductor? Right? That's what I'm interested in. And that 100% is both technical analysis and an essential part of any investing decision.
All right. So we've established that location, sector, and industry group are not.
Location doesn't matter at all. I just do that for fun.
I know. I'm saying it. It's neither technical nor fundamental information. It's a third class known as characteristics. I don't know.
It's the first step before making a decision is you have to gather the information. So that's what we're doing. We're gathering the information.
Okay. Anyway, thoughts on this?
I mean, listen, this is a big base. You know me, man. I like big bases, right? You started out, had some trouble there, right? Had some trouble again there, had some trouble again there, right? And then had some trouble again there, and just trouble. And then what happened? That turned into support, right? Former resistance turning into support right around, 19.5 or so is probably a good level, right? That's probably a good level right there. So all that former resistance. So what's it going to take you to? It's going to take you probably, probably in this area here, that'll take you to about 23.5. So that's sort of your range for now. It's a little tight for me. But if you're just sitting there trying to get a 10% yield and you just churn around there, you can even maybe sell some strangles and collect additional income if that's what you're trying to do. I don't know. I'd have to talk to Sean about the let me just save this so I remember to talk to Sean about the volatility. About the volatility to see if it's even worth it. Right? Is it even worth it? You're getting a nice yield, and now you can add to that yield by selling the wings. Maybe there might be something there.
Okay. This is what email we got all the way back last week. We got this email on Friday. I had to go digging for it. Wavy emailed us about EIS, the iShares Israel ETF. If you're wondering what the hell is in this thing, I'm glad you asked. I'll tell you. We got some CyberArk. We got some Teva Pharmaceuticals. We got some Wix.com, Tower Semiconductor, Monday.com, and in no particular order. Checkpoint Software. Those are the names, the big names at least. Got some banks. Israeli banks.
So this is Israel, which I'm dying to go, man. Dying to go to Tel Aviv. And in this case, when we talked about how it doesn't matter where they're located, I do want to know if they're ADRs. So I shouldn't say I completely don't care about it. This is Israel EIS. So I want to know that, like, for example, I want to know that this is an Israeli ETF. I know because we look at it every week, but for me, if we're looking at like Checkpoint Software, I want to know that that is an Israeli software stock, not a San Francisco software stock, right?
It helps to know these things, no doubt.
It helps to know these things, no question. Whether you're a fundamentalist and you follow all the fairy tales about the stories, or if you're a technician, I think it's important to know. So I'm looking at, 62 is probably right. That'll probably get it done. 61 and a half, 62, something like that. That'll get you done. Right there. We're below that now. So, this thing still has got some work to do. Right? Get above 61 and a half, 62, then we can be off to the races. But, overall, I mean, this one definitely showing a ton of relative weakness. It's a lot of technology, which is, it's a lot of technology. So these things really got to get going again for, bigger picture. We had a nice 6-month rally in technology, but,
it's a lot of tech and a lot of banks. This thing holds 34% bank stocks, 27% technology stocks. So yeah, it's a lot of those two sectors.
Yeah, decent amount of healthcare, a little real estate too. So the real estate is kind of financials also. So it's over a third financials, a third technology. It's a lot.
Mm-hmm. That's right. Okay. We get asked a lot of off the beaten path tickers on this show, which I love. Here's one that's not off the beaten path.
Why don't you remind everybody what the rules are?
The rules are very simple. If you have a ticker on your brain and you want another opinion, drop the ticker in the chat. We would talk about it with a couple of caveats. Caveat number one, we strongly prefer stocks that are above $1 billion in market cap. Now,
we don't prefer, we require. Listen, if you can't be a billion, you're useless to me.
That being said, no, if you're like 950 or you're sniffing around $1 billion, we'll give you the benefit of the doubt.
But that's the exception.
I will. Number two is, none of these like $1.50, 50 cent, 80, penny stocks.
But the market cap eliminates that.
Market cap usually eliminates that. I can't think of any penny stocks that are $1 billion, but maybe they're out there.
Citigroup was at one point.
yeah. All right.
You were in diapers back then, Spencer.
No, I was not. And so anyway, the billion market cap is the rule. And also we love ETFs too, but some ETFs aren't super liquid, so not always a fan of those. But it is what
I got a chart. How about this chart?
Okay. Yeah, we looked at this morning, didn't we?
Yeah. That's an interesting chart. Got my attention.
It's that. So you're saying maybe this is a place for utilities to make a stand?
I think it's a combination of defensive action as well as interest rates falling and bonds rallying.
Okay. Yeah, I can see that.
It's a very interesting situation here with utilities. I would keep an eye on these things. They've been getting smoked. NEE is one of the blue chips there and hasn't really gotten going. So I mean, listen, I don't own it, but it's on my radar. It's interesting. Something interesting going on. Utilities. I feel like nobody ever talks about utilities.
No, they don't. Okay, what about Tesla here? This is the last email we got.
Speaking of things people talk about.
Last email, and then we'll go to the chat.
I do have this is Tesla. Well, either way, we'll just redraw it. I know I already have one all marked up, but either way, here, what are we looking at? We're looking at a monster head and shoulders top. Let's mark it down. This is Tesla, right? So what do you got? You got your left shoulder, then you got your head there. You know what I'm saying? You know, you got your little funky right shoulder there, right? And now you got your neckline, right? It's kind of right around here. And then this was your initial support on the neckline, and this was your break, right? And then your retest, right? This was your initial break right here. And this was your retest. And now we broke out. Right? And my favorite head and shoulders tops, we talked about it at the time. This is one of the best trades we put on all year. My favorite head and shoulders tops are the ones that are not that at all. But as it turns out, our actual failed breakdowns, and which is normal because asset prices trend. People forget that, right? Asset prices trend. People think asset prices are always mean reverting, so they're always looking for a mean reversion, but they trend. So if you're constantly looking for a head and shoulders top, you're defeating the entire purpose of what we're trying to do here in the first place, is to identify trends, because asset prices trend. That's why a lot of these head and shoulders patterns fail to be that, because that's just not how markets work. They tend to trend. So these things that appear like tops, maybe they might briefly break down. In this case, this broke down pretty severely, but once it got back up above that, that's it. Let's go, right? So I think there's a very powerful force of demand overwhelming supply that could send Tesla to new all-time highs, because from failed moves historically come very fast moves in the opposite direction. So right now, running into these former resistance levels here, which makes sense, right? How long it takes to, sort of absorb all of that, is still to be seen. So I'm looking at 320 is probably a good number. Below 320, it's pretty messy.
All right. To the chat we go.
Tesla coming out of the consumer discretionary sector, not technology. Just an FYI.
To the chat we go. H Chain's asking about Tidewater TDW. They had earnings this morning. That's why the stock, or after the close yesterday. That's why the stock is doing what it's doing today. This thing sold off after the bell and came right back on the opening bell this morning. So full round tripper. So it's basically flat from yesterday. But TDW, your thoughts?
Well, I mean, this here's your Fibonacci extension levels. Right? So 56 is probably a good number. So TDW here, you're looking at a $3 billion company. And it is specifically in oil and gas equipment and services based out of Houston, Texas. Spencer Israel. Houston, Texas. Good times, Houston. I like Houston. I don't know why Houston gets a lot of hate. Maybe I go to the nice places. Anyway, TDW, Tidewater. This one, 56, good level there. Above 56, I like this one long. It's the right space. The equipment and services companies specifically actually is leaders in the energy space, which is really interesting, because if you've been following the energy space as long as I have, these are usually the laggards. These are the worst companies in the world. I showed you Transocean earlier, Exhibit A, just a disaster. So the fact that it's doing this well and within the individual sector itself, this is the right space. 56 is a good level there. We're above 56. I like a long target near 88.
All right. How do you pronounce ALB, the company name for ALB? Is that Albemarle? I've never
Albemarle.
Albemarle?
Yeah.
Albemarle. Okay. Albemarle for, who asked about that in the chat? Kevin asked about Albemarle. Chemical company.
Yeah. This is a lithium maker.
Yes,
right?
yeah. They're the world's largest.
There you go. So this based out of Charlotte, North Carolina.
Never been there either.
Stop. You never been? There's other states outside of New Jersey, right?
It's not.
Like New Jersey is like just one state.
Don't know about that.
I'm telling you, it's wild. There's all kinds of cool places. Charlotte's cool. I got no beef with Charlotte.
I mean, I've been to Asheville. Asheville's great, but never been to Charlotte before. Oh, that's not true. I've been to the airport. Does that count?
No.
All right.
I like Durham. Go to Duke game. Sick.
I bet you do like Durham. Yeah.
Yeah, Durham is cool. They got this chicken and waffles place there called like Dina's or something like that. Oh my gosh, ridiculous. Anyway. 170 is the level. 170.
Okay. Let's move away from
You're not interested in Albemarle? You don't seem that excited about it.
No. I mean, I'm just trying to get to the chat. We got a lot of tickets.
Stocks at 193.
We don't know that much.
170 is the lower end of that. We got 50, got 150 points of upside. I mean, that's not nothing. So interesting. Basic materials also potentially getting some rotation. 22 billion market cap. That's nothing.
Let's do a couple of let's do a couple of sectors here. Daniel's asking about real estate XLRE. JC, a week ago you were liking real estate. How do you feel right now?
I wouldn't say liking real estate. I said everybody hated it, so I'm interested. Was really, I think, how I put it. I mean, there's a reason why everybody hates it. It's because it sucked for so long. Like, this thing is just a disaster. You know what I'm saying? Like, this has just been, now granted, this is one of the more defensive areas, of course, and there's just been no need for a defensive posture because we've been in a raging bull market. I mean, right? What are you gonna do here? Right? It's messy, man. It's messy. Like, we're below all this. I mean, we can go, but I think there's individual REITs that might get you done better. More specific REITs and some of the real estate services companies specifically also, I think, could make sense. So rather than owning a basket of REITs, I think that it depends also, why are you looking to do this? Are you looking to generate yield? Because XLRE, let's see. XLRE is only giving you 3.6%. 3.6% compared to the S&P 500 is giving you 1.4%. HYG is paying you 5.6%. I think there's some individual names that you're better off being in. It depends on what you're trying to do, right? Why are you interested in buying these REITs? That's how I look at it. I think everybody has sort of different objectives there. So, all right, I would leave it alone. I would look individually.
Someone asked if you're buying XLV, which I would note is probably going to close red today, just based on what's happened since the open. Yeah, it's green for now, but it's only up 16 cents. It's the only green sector for now of the day. JC, what do you think here?
Energy is about to turn green also, by the way.
Okay.
A lot, we just went through a bad bear market, and a lot of things, technology and others, got slammed, right? Healthcare went sideways, right? Healthcare went sideways. So that's, to me, stands out tremendously. So for me, I'm in the AbbVie. I actually bought more yesterday. I'm in the AbbVie. So here we're looking at this is AbbVie on a relative basis, potentially squeezing here. And then this up here, this is AbbVie. This is the upper end of the range. This is the lower end of the range. So this is where I was buying at the lower end of the range. And I think the path of least resistance remains higher, right? I think that's where we're headed. So if I'm going to be in healthcare, I think some of the, this one is a good example. You're getting beta on the XLV, which is the individual sector ETF itself, right? So yeah, I think higher. I think higher.
Okay. Let's do a couple more here. What about, we got a question from the average trader. He dropped Bitcoin, ETH, and Solana. Let's not do Bitcoin, but we can look at ETH or Solana because we don't look at those nearly as often, or definitely not Solana as often as the other two. So why don't you pull that bad boy up?
So here we're looking at ETH and ETH relative to BTC. Right? So ETH in blue, and then relative to BTC in black. And look how Bitcoin has dramatically been outperforming, right? So this black line going down is Bitcoin outperforming. And Bitcoin tends to outperform alternatives, and that Bitcoin dominance, as it's called in crypto space, is a defensive rotation. Bitcoin dominating is not a good thing for crypto in general. It's Bitcoin becoming less of a percentage of overall crypto that tends to occur when crypto assets are doing well. So even though Ethereum's been doing well since last year, just still a tremendous underperformer. So as an Ethereum long, you really want to see this thing turn around. On an absolute basis, I gotta tell you, I'm really interested in this ETHE. Do you know this one, Spencer?
Is that one of the forks?
No.
ETHE.
This is ETHE. This is
the grayscale. Oh gosh, what is the premium to NAV on this thing is probably outrageous.
I was doing some math earlier, just back of the napkin math with Straza, and you're basically getting 3-to-1 on the price of ETH. Like this thing will be rallying 3%. Like today, Ethereum's up 1%. This thing's up 5.6%. Let's see if Ethereum's still up. See what Ethereum's up. Ethereum's up 1.4%, and this is up 5.5%. So just to show you, it's not technically a leveraged ETF, but that's how the market treats it. I gotta tell you, how many charts do we know have these sorts of bases? I'm liking this. I'm liking this setup a lot. Me personally, I'm probably gonna buy this because I was looking at it closely. This thing's absolutely ripping. I'm probably gonna buy this. Probably gonna buy options on it. The one I'm definitely buying that sort of got me here. What do they say, Spencer? Dance with the date that brung you, right? Is that what they say?
All right, I'm looking at the premium to NAV that this thing trades on.
Well, you can't find it? I have it right in front of me. Do you want
it? Yeah, I'm just curious because
it is. Here's the Bitcoin. Where's the
I'm trying to find it on their site, and I'm finding it difficult.
Here, look. See, I've got the Bitcoin.
Oh, wait, is this it?
This is the Bitcoin discount to NAV. You could go max. See?
Oh, damn.
So you see that
that's good. It flipped a while ago. For the longest time, it was
in bull markets it trades at a premium, and in bear markets it trades at a discount. That's just how it behaves.
Is it that simple?
Yep.
Okay.
Yeah, I mean, just look at the data.
You're right. All right.
Yeah. No, we've done this analysis. So that's what it is. So like when everybody wants in, everybody gets in and trades at a premium. When everybody wants out, everybody gets out and trades at a discount. It's just, humans being humans, Spencer,
All right. White Charts is a great platform. We'll have to work with them more. Let's do one more since we started late. We'll do one more. Brandon is looking to buy some Citigroup. He's interested in buying some Citigroup. JC, what do you think?
Here. Quickly. This is the Ethereum one, trading at a discount, but has been coming back all year, which is which is indicative of the Ethereum and crypto market's been doing the same thing, right? So they move together. Okay, what was this last one? Sorry,
Citigroup Bank Corp.
Inc. Oh, wow. Look at this piece of hot garbage.
I don't know. I was zooming in. It's bunching up when you zoom way in on it. This one's never going to get to its pre-recession highs.
Pre-recession highs?
No, it ain't getting there.
Look at this. The joke back here, I remember like it was yesterday, that the cost of the ATM at the Citibank was more expensive than the share of stock.
Yeah.
I'll never forget that. I remember saying that. I remember being told that. I remember chuckling about that. What a piece of hot garbage this thing is.
I don't know. Short term though. Zoom in. What do you think?
Oh, I can't believe it still exists, to be honest.
All right.
Like, how does this still exist? Like, what kind of sick world do we live in that this company is still in existence?
I asked myself that about more than one big bank. This isn't the only one.
So like, what are you trying to do here? Like, I just, you could buy it if you want. Oh man, is when there's 8,000 stocks or whatever it is, this is the one you're gonna buy? Like,
I don't know.
You know what I'm saying? Like I lived and traded and through the great financial crisis and the whole thing, and like I'm over it. Like I don't care. Like I don't have like this bias towards Citigroup. Has nothing to do with that. It's just look at the chart. Like look how many nice charts we looked at in this. By the way, kudos to the audience bringing up some good charts. Great opportunities, but Citigroup.
All right. That's where he stands.
Howard Lindzen is not allowed back on CNBC because on TV he called it Shitty Group.
It's probably worth it. All right, that's a good place for us to wrap, guys. The show airs every Tuesday and Thursday here on Stock Market TV, 1:00 Eastern Time. On Thursday, you'll have Pat and Straza with you. So get your requests in anytime between now and then. Questions at stockmarketmedia.com. Thanks to all the questions today. And have a good rest of your day.
Adios.